Welcome to The Explainer. Today we're diving into an absolutely fascinating tool for mastering the financial markets, all while keeping your risk incredibly controlled. We're talking about the Cent account. We're going to break down exactly how you can leverage these accounts effectively so you can take these strategies and apply them literally today. Okay, let's dive into this. Here's our roadmap for today's Explainer. Section 1, Welcome to Sunnet's Accounts. Section 2, Setting up your broker. Section 3, Buying funded accounts safely. Section 4, Strict risk management rules. And finally, Section 5, the macroeconomic capital account. We are going to go all the way from micro-trading steps right up to massive macroeconomic concepts. So, Section 1, Welcome to Cent accounts. It's all about starting small to build that professional confidence. Think about the massive contrast in scale between these two environments. In a standard account, one single lot represents 100,000 units of the base currency. That is a sizing that carries some intense pressure for a beginner. But in a Cent account, your balance is denominated entirely in cents. It completely strips away that financial panic, giving you the absolute perfect foundational environment to learn the real mechanics of margin and leverage. Now, the number 1,000 actually holds a little bit of psychological magic here. Think about it. If you make a simple $10 deposit, it instantly transforms into 1,000 manageable cents in your metatrader terminal. So suddenly you are managing a 4-digit portfolio. This lets you practice your position sizing and trade management as if you had a much larger bankroll, but you're really only risking the cost of a fast food lunch. This setup offers just incredible flexibility. You're getting into Nano-Lot Trading, meaning you can execute trades as small as 0.01 cent lots. But honestly, the real value here is the psychological transition. Unlike demo accounts where it feels like monopoly money, Cent accounts trick your brain into taking the process seriously. You actually feel those real profit and loss emotions safely, bridging the gap to live trading psychology. It's absolutely ideal for testing out high-frequency strategies like scalping or grid trading without risking a fortune. Moving on to Section 2, Setting up your broker. Let's talk about the practical steps to get you rolling. Now, what's really interesting about this is that not all brokers cater to retail traders with Cent accounts, but the highly rated ones have built their infrastructure specifically for it. Exness is fantastic for seamless app integration, while Fusion Markets is a real game changer for cost-conscious scalpers who need ultra-low spreads. Whether you want a beginner-friendly interface like a limp trade, or you're looking for fast global execution like you'd get with FX Pro, there are highly rated, regulated options tailored exactly to your style. And getting started is lightning fast. It's just a simple 4-step checklist. First, registration with your basic details. Second, standard KYC verification. Third, account selection. And right here is where you want to make sure you specifically choose the Pro Cent or Standard Cent option. And finally, platform connection, where you hook up to MT4 or MT5. Boom. Just like that, you are in the market. All right, Section 3, Buying funded accounts safely. This is for when you're ready to access larger equity. So, this brings up a pretty critical question, right? How do you actually buy a funded Forex account safely? Scaling up through a prop firm is super exciting, but getting that discounted access to large equity requires some heavy due diligence to make sure you avoid scams. Think of this as your survival checklist to protect your capital. First, always verify payouts and independent reviews. Next, avoid any firm offering cheap accounts with wildly unrealistic profit targets. If it sounds too good to be true, it is. You also need to read their rules on drawdown limits and news trading very closely. When you pay, use secure payment methods. Definitely avoid sending direct crypto to unknown firms. Start small. Oh, and test their customer support before you ever pay a dime to see how responsive they actually are. Which leads us perfectly into Section 4. Strict risk management rules, the absolute core of your survival as a trader. And this brilliantly illustrates what separates a seasoned professional from someone who's basically just gambling. It's a strict, uncompromising adherence to capital allocation. The golden rule. Maintain a massive 98% of your capital as completely safe by never ever risking more than 1 to 2% of your total balance on any single trade. Guarding that 98% is literally what keeps you in the game for the long haul. To actually maintain that ratio, you have to follow these core rules systematically. Strict risk control means you know your prop firm's drawdown limits inside and out, and you stay well beneath them. Consistent position sizing is what prevents you from over-leveraging and blowing your whole account on one bad Tuesday. Then there's drawdown control. Cut your losses early, and absolutely no revenge trading. If you take a hit, walk away. Don't try to win it back in one massive swing. Finally, profit withdrawal and scaling. Make sure you secure your profits regularly. Sticking to these rules is what ensures steady growth and protects your funded status. Okay, shifting gears a bit for Section 5, the macroeconomic capital account. Let's look at global financial flows. To truly master the Forex market, you have to look beyond your personal dashboard and grasp the global fundamentals. In macroeconomics, the capital account is the record of all transactions between the residents of one country and the rest of the world. Basically, it's the massive, overarching ledger of global money movement. So let's break down how this actually impacts those charts you're staring at every day. The macroeconomic capital account tracks huge financial flows. We're talking foreign direct investment, international loans, portfolio investments. Why does that matter to you? Because it directly reflects investor confidence. If a country has a surplus, foreign investment is pouring in, which means high confidence in that economy. And here's the kicker. Those massive capital inflows directly increase the demand for that country's currency, which strengthens the very currency pairs you are trading. On the flip side, capital outflows weaken them. Once you understand this, you stop seeing just squiggly lines on a chart, and you start seeing the actual heartbeat of global finance. Bringing this all full circle, your journey to understanding these massive macroeconomic trends, utilizing leverage properly, and operating with regulated safety, well, it all starts right here. The cent format is, without a doubt, the absolute best way to learn the mechanics of the market without risking your life savings. It is the ultimate training ground. So, I want to leave you with one final provocative question to think about today. Are you ready to trade like a professional macroeconomist, starting your journey with just 1,000 cents? The tools are out there, the risk is minimal, and the potential to build real, lasting knowledge is absolutely limitless. Get out there, start small, and trade smart. Thank you so much for joining me for this explainer, and I will see you all next time.